Hey guys and gals, how you doing? This is Greg McLeod from the Elite Traders University and the Pip and Run Forex Scalping System, and we are going to try to go ahead and do our weekly Forex forecast today. Bulls versus Bears for the week of December 12th, 2021. Again, my name is Greg McLeod. We're going to get started in momentarily, and let me go ahead and let's get right to the economic calendar. Um, we've got some big news coming up. We have the FOMC coming up. But let's we have some UK data coming up on Tuesday. Monday looks like a light day. There's no high impact items on Monday. So we're going to jump right to Tuesday, 2 a.m. Eastern time. UK data, a lot of the average earnings data, high impact item that's coming out. So the British pound will be in play. We'll look at 2 a.m. Eastern time. Followed by, let's go ahead and move on to at 8:30 a.m. Eastern time. We're going to have the U.S. Producer Price Index (PPI). PPI stands, think of the I in PPI to mean inflation, not just the word index. We've been seeing a lot of high prices. Inflation, CPI came out last week at a 39-year high at 6.9%, very hot. And so there is expectations that the Fed will be forced to raise interest rates in order to curb inflation. And now we'll talk about the currencies that will actually benefit from this move by the Fed, because a lot of people think that the Fed is behind the curve as far as controlling runaway prices. And so Jay Powell will be up on Wednesday at 2 p.m. Eastern time, but we're going to get some data out of the UK at 2 a.m. on Wednesday. We're going to have CPI, Consumer Price Index, which is inflation data coming out of the UK. Previous number is 1.1% for the month-on-month number, and the year-on-year number is at 4.2%. And so we could see a dramatically higher inflation in the UK. The Bank of England may have to raise rates as well, but the Fed has seemed to maybe tightening a little bit faster. Okay. We also have market manufacturing PMI out at 4:30 a.m. Eastern time. Previous number is 58.1. Anything better than that could send the pound higher during the London session. Okay. Now, when we get down to 2 p.m., we'll get into the FOMC, or the central bank. Jay Powell that's the head of the U.S. Central Bank, called the FOMC, the Federal Open Market Committee. And they're going to have their policy, their monetary statement that's going to come out. And we'll see if they're going to actually hike rates. Previous number is 0.25%, and we're looking at maybe a 25 basis point hike, and some successive hikes that would really put some fire underneath the dollar. Dollar already in an uptrend, and that could be bearish for the euro, the pound, and the Australian dollar. The currency of choice during this time would be to look at the euro. Euro is in a downtrend in bear market territory, so we could probably see the euro continue to plummet toward that 1.1100 area. Okay. Now, right after the FOMC meeting, before the FOMC meeting, we might not get a whole lot of volatility, a lot of movement, a lot of big players waiting on the sidelines ahead of the big Fed announcement at 2 p.m. Eastern time on Wednesday. But once we get past that, we're going to see smooth sailing. The Australian data comes up. We want to look at the Australian dollar, maybe Aussie yen, Aussie Swiss, and then we have the unemployment rate coming out at 5.2%. If it comes out worse than that, then we could probably see a drop in the Australian dollar. If it comes out better than expected, we could probably see some type of a bounce in the Australian dollar. But remember, it's right after FOMC, so it may not get that much of a bounce. Okay, moving right along, we have a newcomer on the block that we don't see too often is the Swiss National Bank, SNB. The Swiss monetary policy decision comes out. Their rates have been negative for a really long time, so it'll be interesting if they decide to tighten. Currently, their rates stand at negative 0.75%. Can you imagine paying money for them to hold your money, basically? Negative interest rates. So they have a rate decision coming up, and then Thursday, we also have the Bank of England, their rate decision as well. Previous number is 0.1%, and their asset purchase facility at 895 billion pounds. And so we'll see if there's any reduction in that asset purchase facility, or a hike, a surprise hike, or a projected hike in the rates that are like at multi-decade century levels of lowness. Since the 1800s, we have never been this low for the Bank of England. Then you have the Bank of England minutes and monetary policy summary, and then you have the ECB rate decision on the same day as well. So another central bank, three central banks. You have the Swiss National Bank, the Bank of England, and the European Central Bank with the rate decision coming out at 7:45. Bank of England will be at 7 a.m. So it's going to be really, you look at the pound and the euro, they're going to be very volatile during this time. And so unless you have a system like the pivot and run system where you can actually forecast price ahead of time to be able to give us that edge in the market, to actually see where the institutional players are in the market, then I would suggest you stay out of the market if you don't have that edge, and probably wait an hour afterward to let it settle out, and you might get a confirmation of direction. Okay. And then following at 8:30 a.m. news cycle, it's going to be really big Thursday. We're going to have the U.S. retail sales, high impact item. 1.7% was the previous number. Anything better than that, and that we could see some pretty big movements. Again, I would trade the euro would be my currency of choice, because the euro is called the anti-dollar. It was created, it was traded in January 1st, 1999. Before, in the 70s, it was the European currency unit. It was a basket of currencies, but it was created. The euro was basically created as an alternative asset to the U.S. dollar. When one goes up, one goes down. So they're diametrically, they're opposite each other. So one way to gauge where money is flowing is to look at the euro and the U.S. dollar. And then we also have another rate decision as well. The Bank of Japan is going to have a rate decision coming in at 10 p.m. Eastern time. So look for that. And they also have negative rates like the Swiss National Bank. So lots of central bank action coming out on Thursday. Thursday is going to be a really, really, really big trading day. Probably some of the biggest trading days as we get into the holidays, where you might see some diminishing volumes and maybe traders heading off for winter break in the northern hemisphere, or maybe summer break in the southern hemisphere. So you may have that. So it might be, you may be off from work for the holidays, but remember, the rest of the market may be off as well. It may get kind of flat or very illiquid trading, which we might have wide spreads and things like that. Okay, now Friday, December 17th, we'll wrap things up with the retail sales out of the UK, as well as a Bank of Japan press conference and some PMI, Purchasing Managers Index, out of the UK. So again, we're going to be looking at, the pound, the yen, the euro, and the Swiss franc are all going to be in play. So we'll look at those charts next. Okay, and if you like what you've seen so far, go ahead and give me a thumbs up or a like. I am recording this. I was streaming it live, but we're having a little bit of internet connectivity problems. So we tried the live stream. So we're just going to create the recording, upload it to the various social media channels, and then you can go ahead and have access to that. Okay. So let's go ahead and get into the charts. Okay, and we'll get into, let's go ahead and go to Trading View. Okay. Oh, after I clear my cookies, I had to clear everything out to get everything working here properly. And I guess I gotta log in, right? Hopefully all my goodies are there. And we'll start with the dollar index, U.S. dollar index, the arrangement of currencies and the basket versus the Okay, accept cookies. Okay. Here's US dollar index, and I'm giving you three scoops of ice cream are better than two, and two are better than one, right? Man, I'm making myself hungry some ice cream right about now. Keto-friendly, carb-free ice cream. I tell you, that stuff is really good. That, I guess it's Breyers? Yeah, okay. Anyway, dollar. Here's a dollar index. Daily, we have a daily 4-hour and 30-minute time frames, and we can see uptrend, higher highs, higher lows in the US dollar index. It was kind of flat. I was looking for a move back up to the 96, 94 area, but we just kind of moved sideways. But we're still above our moving averages, making higher highs and higher lows. And so we can see this roaring uptrend. This is the US dollar, guys, right? After we had a double bottom back here, back in May, about at the 89 level. We haven't looked back. And we can see even on the smaller time frames, we're just kind of lingering around and probably waiting for the Fed to really, things are moving sideways until we get some type of word from the Fed. Once we get a word from the Fed, we're in a triangle. Triangles usually indication of indecision, where we have bulls, we have our demand trend line, and we have a supply trend line. We have supply and demand, and one way another we're going to break out and move to maybe some new highs here, right? And so we can see that even if we go to the lower time frame, a couple of things can happen here. We could see a move down to retest the lows, right? So this could be short-term bearish for the dollar, but longer term or medium term, we could see a break. So we might see a prolonged move down, maybe down to the 95, 97, maybe even test the old low at the 96 area, and then or even the trend line support comes at 95, 95. Okay, so maybe we get one more test of this supply line or demand line before we test the demand or supply line up at 96.38. Okay, so bulls versus bears, it's kind of like both. It's like I'm bullish and bearish. Okay. So let's go ahead and move on to the euro. Euro is coming up with and let's go ahead to our forex majors. All right, and let's go to the euro. Okay. All right. And here is our euro, our hero. And you can see it too, like the US dollar, has been moving sideways in kind of like a sideways pattern. Kind of like we're waiting for Jay Powell and the Fed to make their move. Make your move right now, baby. Okay, make your move. So we're still in this triangle. Here on the daily, it's pretty big triangle from one spot 1198 up to 11373, right? So about 130 something pips. So we're looking for either a break north or a break south. Again, with all these central banks gearing up to give their rate picture in the face of the Omicron pandemic. We have a lot of insolvency in the Evergrande stock in company in China, and there's thought there might be some contagion going on. And the euro has basically, we're below moving averages and we're in a downtrend, so we would expect this downtrend to continue. However, just because the trend is pointing down doesn't mean you make any money getting short, because timing, it's like comedy. Timing, it's everything about timing, right? Then why did the chicken cross the road to get to the other side? Well, see, I just screwed that joke up because the timing was off, right? And so sometimes we can have the right setup, but we enter at the wrong time, right? We know the direction, but you want to sell high and buy low. And right now, in a downtrend, it might need to go a little higher, right? It may need to up here 113.43. That's about 30 pips from where we are right now. We may get a little bit of a push higher in typical ABC pattern before coming back down, breaking this and getting lower. So again, I'm not probably not going to be very helpful on this a broadcast until we get closer to those announcements. We're kind of coiling in this type of a pattern. We may get one more press up to the upside, and I'm thinking maybe 100% expansion of this. Take this swing, connect these major swings here, and look, the 100% expansion takes us to 114.34. So maybe we get up somewhere up in here, and then we drop, right? So we have a bearish ABC pattern. So short term, very short term, I would be bullish, but medium term, I would be bearish. So it's one of those things where you can play them both. But if you want to be safe and stay on the sidelines until all this stuff passes, I would wait till one of these lines gets breached, and then take trades on a break of 113.50 or break of this low at like 112.25. And then that means the Bears are back in town, right? The Bears are back. But right now, you could get caught in the chop, and it wouldn't be very pretty. Okay, so let's go ahead and go to the GBP USD and take a look at that as well. And it's we see it's in a very strong downtrend, lower swing highs and lower swing lows. We peaked out in October 22nd at the 1.3835, multiple tops right there, and then we broke below our 20-period moving average, which acts like a synthetic trend line. It's like an auto trend line. I don't have to draw that, but if I did draw a trend line, it would follow that moving average. It's trending, right? And markets trend about 20% of the time, 80% of the time they stay in the range. But once they start lower swing highs, lower swing lows, we're good to sell high, and buy back low, right? Okay, so we're coming up to some, we're popping up at 1.3267, and we're coming into some moving average resistance. So maybe we're up for a little bit, to the trend line, and then we start to it starts pulling down. And we're coming right, if I could connect these highs together, see, we almost, so we got a breakout. We have a breakout. So this could be like a fake break of this trend line, but we're still below moving averages. We could see prices drop. Okay. So so there you go. So that's the pound versus US dollar. Another thing we want to take a look at is the Aussie dollar, AUD USD. We have that Aussie employment data coming out as well. And this too, lower swing highs, lower swing lows, very bearish trend. We broke the trend line. If we drew a trend line on the daily chart, we're still down below the 200 simple moving average as well. And, we are popping up to like a double top like area here. And this looks bearish. It has a bearish tone to it. And so we might see a push down. I'm looking for a push down. 71.68 is where we are currently, and looking for maybe a move down, right? A continuation of this downtrend. This was like a little bit of a commercial. Now, we're coming up on. We came up to this area. just short of the 0.7200, a whole number round number bankers level. We've got some resistance right there, and so we can see it continue to drop. Right. We're also making lower swing highs and lower swing lows. If you're into market structure, we've got a lower high, a lower low, a lower high, and so we maybe break a trend line here in the 30-minute. We would look at maybe entering short on Aussie dollar. Looking for a retest of the 69.90 and below. The bottom could drop out, especially if the Fed starts to raise rates. It really could upset the apple cart. Let's go ahead and let's look at the Swiss franc, and let's go here and go to our majors. Go to the Swiss franc, and then let's take a look at now Aussie Swiss maybe something. Excuse me, maybe a little bit more. Let's do something. We want to take a risk currency versus the Swiss franc, right? So maybe even GBP CHF, right? And it's been in a downtrend as well. And I'm bearish this pair too. 30 minutes already breaking down. And so we're like maybe get short below 1.2202 for a move back down to like 1.2176. And I would take off half if they got somewhere in here. Because it looks like it's coiling. Everything is coiling like a cobra. It's like a snake. It's coiling for the strike. And the thing about it is now, which direction is it going to go? And we pull up our pip and run indicators and things. We could probably get a better target of where this is going to go. But just based on this basic technical analysis, it's you have to play the breakout, right? You'll be late to the party, but you'll have some confirmation, right? Especially if you don't have access to the pip and run indicator templates and their system. That's reserved for the pip and run clients. So if you want to find out more about that, make sure you watch the video, www.4pillars2sixfigures.com. That's scrolling above my head, and you can actually watch and learn how our forecasting system actually works. Okay, so pound Swiss, and I want to take a look at the euro pound, EURGBP, because that also gives you a little bit of a clue of what could go on. Because basically there's no euro pound pit where you have an Australian dollar pit and a gold pit and an oil pit, because euro pound is really euro versus US dollar divided by pound versus US dollar, and it's a relative strength of one currency versus the dollar. And if one currency is stronger against the dollar than the other currency is stronger against the dollar, then that creates your euro pound, this cross right here, right? So basically, if it's going down, the pound is stronger than the dollar and stronger than the euro, right? So this is what we would see, this downward move. Now, if we go to a higher time frame chart, we can see that we are basically, we've been trending down, right? But moving sideways for the most part here on the 4-hour chart. And I just want to zoom in on the 4-hour chart for a moment. And the 4-hour chart, we can see that we've been in this really tight range, but we've just come off of a high, right? About 85.93 is the high, and then we have a low of this range from the 83.85 area. So seems like price is following a nice little rhythmical pattern, double top, We expect this to continue to work its way down and work our way down to 83.85, which means that the pound would be a lot stronger than the euro. Okay, here. Let's take a look at just for giggles here. I know a lot of you guys trade crypto, and my condolences. um, the premise of crypto. The premise. I'm not, I don't bash crypto. I own crypto. But the premise of crypto is it's a replacement for the U.S. dollar. Okay, I'm gonna remove all these drawings. It's a replacement for the U.S. dollar. And they cite really wonderful things. They say, well, we have these massive deficits, which we do, $21 trillion and growing. And money is hard to move around, and that's also true too. And crypto is the future where we can trade without borders. True. However, the premise that the dollar is going to go away is really hard to swallow here, because the dollar is the reserve currency of the world. That means even if China is doing importing oil for Saudi Arabia, they use dollars. Okay, to play in this global Chuck E. Cheese with the machines, you have to have that token with the little mouse on the front of it. Well, here you have to have the dollar token, and because the dollar is embedded into the economic system, and the largest economy has to start raising rates. People who have debts denominated in dollar assets are going to find out that they're going to not be able to pay back those loans. So we're going to see some financial crisis. It won't be just Turkey; it might be other countries as well. And it also means that the dollar, this is BTC/USD, which means people were trading their dollars for BTC, and we had this wonderful run up, right? And I hope you guys were able to make some money down here from the 29.0230. Lots of support there. With lots of support there, price bounce, and it did this wonderful ABC move, this three-wave correction or three-wave move up. However, we broke a demand trend line and got into bear market territory, really lickety split quick, right? Broke the trend line and continued down. Now we're down to an area of support. We have like a demand zone right there where price is like hanging on by a thread. But if that zone gives out, then there is a lot of air below. Okay. And this is our daily chart. And so if this was some type of double top, price has a memory. Top, rally, and the people who got here were like saying, please, if you just come back, I'm going to get out of this trade. So when price came back, all these sellers who couldn't get out before got out. And then boom. And this type of pattern forms like an M. And so we have a low of like 29,070, coming up. Especially if this demand zone gives out. This is a bearish double top pattern, and it is not pretty. And I know I'm taking a hit on my Bitcoin holdings. But that is, that looks very bad. It's very good if let's say you're flat the market and you can get into a leveraged Bitcoin or leveraged crypto account, and you can actually buy puts or no, not buy puts, but you just short it. You just click the button and go short, right? And you can see this could go, pretty far down. I don't know if I can I do a paper trade? Show you what this would look like. Yeah, like, oh, Why is not? Well, anyway, this is where I'm looking at. Oh, there we go. And we can go like this and like this. Okay. 49,000. I need a little bit more space than that. Oh. Okay. So that's what that looked like. Okay. So that's how that trade would look like if we were to do that. And other coins also are similar, like Ether, USD, right? And if we see, let's take it a little bit of time for it to load, right? Similar type of pattern, kind of got a little bit higher than the old high at 43, the high that we had back in May, and we worked our way up a little bit higher than that. So we could, but it's holding up a little bit better. Higher highs, higher lows. We've got this trend line going on right here. And we could see that, this line is holding. So this is, this is very tradable for a bounce. If you drop down to a 4-hour, right, you can actually maybe take this long off the bounce at the trend line and maybe pick up a couple of $100 there, right? Again, this is pretty, we come to the trend line, bounce off the trend line. We're bouncing right now, and we seem to be forming some type of a trend channel here on Ether. And so that's something that we could possibly hang our hat on and make some bucks, right? Okay. All right. So we went over the currencies. We went over the news that could affect the market. I hope you enjoyed it. And again, come over to Elite Traders University and check us out. There's a free income boost blueprint ebook that you can get access to. There's also a free masterclass. There's also, you can also register, and actually, if you're interested in learning how to trade forex and taking your trading to the next level, if you're serious about becoming a forex trader, then you need to be trained by a professional, and I'm the professional that can help you achieve your goals. So come to EliteTradersUniversity.com and sign up for a free strategy call, and be more than happy to speak with you, give you an outline of what we do, make a game plan for you, and you have a choice of either finding out how we can work together more closely, or take what I give you and try to do it yourself. And I look forward to coaching you and serving you and helping you become a successful trader. Okay, my name is Greg McLeod, and I'm so happy that you were able to watch this broadcast. And we'll talk to you soon. Thanks so much. Peace and pips. Cheers.